Hi, good day everyone. Today we will be presenting to you our group report about auditors and corporate governance. Today I will talk more about corporate governance, how it started, and what is corporate governance. The history of corporate governance. The council was convened in August 2002. It brings together various business, shareholder, and industry groups, each offering valuable insights and expertise on governance issues from the perspective of their particular stakeholders. Its primary work has been in the development of the principles and recommendations. It was first introduced in 2003, and the second edition was produced in 2007. And due to the global financial crisis, some jurisdictions have adopted the new legislations and updated some of its corporate governance codes, and then created the third edition in 2014. It includes global developments, and some of its structures were made simple to be flexible to the listed entities. In 2017, the Council agreed to commence the fourth edition, which focused on the emerging issues around the culture, values, and trust. It is fueled by recent examples of conduct by some listed entities falling short of community standards and expectations. The fourth edition will be in force for financial years commencing on or after the 1st of January 2020. What is corporate governance? Corporate governance is a framework created in which companies are being directed and managed to perform their duties to create shareholders' value. It deals with the conduct of the board of the directors and the relationships with the management and shareholders. Good corporate governance promotes investor confidence, which is crucial to the ability of entities listed in the ASX to compete for capital. It consists of board of directors, accountants, and auditors, which all plays a very important role, which should be distinguished. The board of directors are in charge of the entire business policies and plans in running the whole organization, while the accountants ensures that internal control, policies, and procedures are implemented and actively working in a business entity. Auditors are those who protect the interests of the shareholders. It reports the state of the company's financial status and ensures that financial reports of the company released are valid, reliable, and accurate. The purpose of the principles and recommendations is to achieve good governance outcomes and meet the reasonable expectations of most investors in most situations. The basis of the principles and recommendations is under the principles and recommendations, if the board of a listed entity considers that the council recommendation is not appropriate to its particular circumstances, it is entitled not to adopt to. If it does so, however, it must explain why it has not adopted and recommended. It is called the if not and why not approach. This approach ensures that the market receives an exact level of information about the organization's governance and governance arrangement so that investors and stakeholders can have a meaningful dialogue with the board and the management on governance matters, make better decisions, and how to vote on a particular resolutions. Where to make corporate governance disclosure. It should be disclosed either in the entity's annual report or on its website. And one of the focus of the corporate governance that has affected the auditor has been the audit committees. Audit committee is responsible for overseeing the company's accounting and financial report. It should maintain a direct line of communication between the board of directors and auditors, which permits open discussion of sensitive matters such as controversial accounting issue, disagreements with the management, deficiencies in the design of internal control, failures in the operation of internal control, difficulties encountered in performing the audit, discuss the general scope and timing of external audit work, and involves in the nomination of external auditors and it involves in the nomination of external auditors and the reviews of the proceeds of the audit fees. External auditors is a major contributor to achieving an effective audit committee, and they assist the audit committee by informing it of any developments such as legislative changes or new accounting standards.
Hello everyone, my name is Shahan. My student ID is OIN5011. Let's start today's presentation. Corporate governance is an important concept that we need to understand very well as an accounting student, because it is so closely related to the performance level of an entity. It set out a rich framework that can be used to overview the whole operational and managerial procedures of an entity. Also, it shows the rules, relationships, systems, and processes in organization. It includes 8 important principles, that each of these principles are vital to the effectiveness of corporate governance. They include rules and the responsibility of the board and the management should be made clear, and the level of performance need to be reviewed on regular basis. The board need to be formed with proper size and equipped with sufficient knowledge and skill to its industry. In order to achieve its added value to the entity, organizational culture should be recommend crew members to act lawfully, ethically, and responsibly. Reports need to be verified to ensure their integrity, and the manner of verifying it needs to be well designed. All related information that could possibly affect the utilizations of public data need to be disclosed. Access to internal information and facilities should be provided to security holders to ensure their rights to be exercised. Risk evaluations need to proper structures, and it needs to get reviewed on regular basis to ensure its effectiveness. Last but not least, to be able to maintain high quality key personnel for important positions, remunerations should be reasonable and fair. Okay, that's all my presentation. Thank you for listening. I will pass it on to Libin to continue.
Hi, my name is Libin Chen, and today I will talk about the risk assessment process and audit approach. Risk assessment is an important element for health and safety management. In Crown Resort Limited corporate governance statement, 8 principles have been stated with a clear explanation. However, several parts are brought into our attention. First, from Principle 1, which is lay solid foundations for management and oversight. Crown Resort Limited has established a comprehensive committee, include Audit and Corporate Governance Committee, Corporate Social Responsibility Committee, Finance Committee, Investment Committee, Nomination and Remuneration Committee, Occupational Health and Safety Committee, Responsible Gaming Committee, and Risk Management Committee. Each of them has adopted a formal charter that outlines its duties and responsibilities. In other words, functions have been delegated to senior executives. Furthermore, there is a policy concerning diversity which requires to achieve gender diversity for the board. Its objectives to describe the respective roles and responsibilities of its board and management and regularly review their performance. From Principle 2, Structured Board, the board skills matrix in Principle 2 is noticeable as well. The Crown Board has adopted the following board skills matrix, which sets out the mix of skills and diversity that the board is looking to achieve in its membership. Although the board skills matrix is important, it's only part for the selection procedure that the board is required to follow. The nomination of committee has responsibility for reviewing the appropriate of the board skills. Therefore, the responsibility of the nomination committee are to ensure that the board maintains appropriate experience, expertise, and diversity. The board is structured effectively. In Principle 5, requires making timely and balanced disclosure to ensure compliance with ASX listing rules disclosure requirement. In a statement, it can be stated that Crown has a formal continuous disclosure policy in place which is designed to ensure compliance with ASX listing rule requirements. For example, the information should be market sensitive and the information should be announced to the public. In a nutshell, as an auditor, when we look into the Crown Resorts Limited corporate governance, eight principles are the most important guidelines for us, which help us to establish a clear organizational strategy to ensure that the risk planning and management are effective enough due to separation of power and responsibility. Then we move to the audit approach. Audit approaches are the core parts of auditing. Both internal and external audits apply audit approach to conduct their activities. There are 4 types of audit approach, include substantive procedures audit approach, balance sheet audit approach, system-based approach, and risk-based audit approach. Risk-based audit approach is the most used of the approach. Reducing audit risks is the main target of this approach. Therefore, understanding how the business works and clients' environments and their internal audit control is necessary. To carry out the Principle 1 of governance statement, there is a diversity policy under the principle, which means the Crown Resort established the measurable objectives for achieving gender diversity and for the board to assess annually both the activities and the progress in achieving them. It is also noticeable that in Principle 2, the board skills matrix is valuable, which sets out the mix of skills and diversity that the board is looking to achieve in its membership. The board skills matrix highlights the key skills and experience of board and the extent to which those skills are currently represented on the board. To further explain, conducting Principle 5 is also important to influence the audit approach, ensure making timely and balanced disclosure is necessary. The auditor should choose risk-based audit approach to audit Crown because it principally performs by understanding client, business, environment, and internal control. In the next part, Echo will introduce the audit strategy and audit evidence.
Audit strategy is the scope and conduct of auditing and audit planning process, and audit program or audit plan ASA 300279, ISA 300279. Audit planning is indicated and assist for the auditor. ASA 3005, ISA 3005 is required that the engagement partner and other key members of the audit team members be involved in planning the audit. ASA 22014, ISA 22014 is required the auditors to be satisfied that the engagement team and have skill any expert and competence and capabilities. ASA 31518, ISA 31518 requires many audit firms use computer software to produce audit programs that are adapted or tailored to the auditing and auditor. needs to understand the method the entity uses, the process, and accounting information system. Audit evidence. Hotel business internal control procedure is usually tend to weak and ineffective. The auditor has to be careful to evaluate the effectiveness of internal control system in a range of areas before deciding audit techniques and method to be followed in those areas. Sampling of the substantive test of examples. Verify cash sales, an electronic billing machines or numerical manual bills, daily sales report, and reconcile with the total of the bills roll, the kitchen order ticket with cash bills. Verify credit sales. Check the daily report on room details with number of persons in each room provided and what the services they used it by independent person. Verify cash book and guest bills. The cash book and the guest bills must be equal. Confirm. Verify stock. Employees could steal any items from stocks. Check the stock at the beginning purchase to the end of sales. Verify of payment to travel agencies. Check the payment to commission for travel agencies were correct or not. Any bookings or any service reservation comes from agents. Verify of payment to laborers. Maintenance of proper wage records and implementation of adequate control in payment of wages. Because hotels have lots of employees, just few hours for the event people to just seasonally people and full-time workers, etc. Verify asset. Hotel has semi-fixed assets such as silver and cutlery, blanket, curtains, and these has to be recorded. Verify of miscellaneous items. Hotel has to maintain in foreign currency payment and requirement of statute governing such conversions are duly complied. The occupancy in progress as on the date of balance sheet is appropriately valued and accounted. The auditor analyzes the financial statement by calculating and comparing real cost, the occupancy ratio and relevant ratio applicable to hotel. Thank you very much for watching.